I'm Michelle Fields for PJTV at the National Press Club in Washington, D.C. Today, Dr. Vetter from the Center for College Affordability is talking about why college has become so expensive.
Why are college costs rising constantly? The irony of the whole problem is that the primary cause of the student loan debt crisis is student loans. The proportion of recent college graduates from the bottom of the income distribution is smaller today than in 1970. The programs on balance are not helping the poor. A strong case can be made that these programs have contributed to declines in academic rigor and the quality of instruction. Too often, colleges accept marginal students that they highly suspect will fail. And when the student drops out, or maybe some of them marginally graduate and then fail to pay their student loans back, there are absolutely no consequences to the colleges who perpetrated the tragedy through their admissions policies in the first place. The colleges get off scot-free.
So you argued that colleges need to have more skin in the game. What do you mean by that, and how does that work?
Well, right now, it's the colleges that decide who attends the universities. And when they make the decision whether a student is allowed to attend a university, the student then borrows money. If the college accepts a lot of students knowingly that are likely to flunk out or drop out, or not likely to get good jobs after they graduate, maybe because they have a major that is not particularly well regarded by labor markets, ends up the student usually defaults on the loan. So when the student defaults on the loan, maybe the taxpayers are on the hook for $30,000 or $40,000 or $50,000. What if we said that part of that, not all of that, maybe $15,000 of it ought to be paid by the person who perpetrated this in the first place, namely the colleges and universities? If that were to happen, the colleges and universities would become much, much more cautious about who they accept. There are trade-offs with that. It might be some deserving kids would be kept out of colleges because of more stringent admissions policies, but there would also be a lot of savings to the federal government, and I think there would be a decline in this problem. I think we'd have fewer dropouts. I think we'd have fewer loan delinquencies. I think we'd have fewer kids living in their parents' basement.
It seems as though you are implementing economic principles to higher education, but a lot of liberals and Senator Elizabeth Warren will say that you can't do that. You can't compare education to McDonald's or to a corporation. What's your response?
I think education is a good or a service that we provide to people. We use resources to educate people. Anytime you use resources, we're talking economics, and it's naive to say, or excessively idealistic to say that education is beyond the pale of economic analysis. And indeed, I think part of the problem with higher education is we sort of assume that whatever we spend in higher ed is good and just and so forth, and that whatever we spend on other things could be cut back or is subject to scrutiny by markets. I just don't see the distinction. Education, it has a public good component. Elizabeth Warren would argue. That is to say, it serves the broader interest, but it also has a very strong private component to it. Private good component. People go to college mainly for some advantage that they're seeking. And usually, and liberals sometimes have trouble understanding this, it's an economic advantage. They want a good job. They want to do well after college. And that is usually the prime motivator. If that is the case, then why shouldn't market principles apply here as it does in any other investment that we make? We invest in stocks and bonds, and we have why don't we have markets and those things? Why don't we in higher education?
And if you were appointed Secretary of the Department of Education, your job was to fix this whole student loan mess, what would you do? What would be the first thing that you'd do?
Well, I couldn't do much right away. As I said, I don't think this is a problem that can be solved overnight. I would work to make the student loan program a little smaller, as I indicated, and also more rational. For example, everyone pays the same interest rate on loans. Maybe that's not when they take them out. There are some students at a greater risk than others. Maybe we should introduce some market principles into the interest rate. Maybe we should put more strict loan limits on. For many years, the Pell Grant, you could take a Pell Grant out for 9 years. Now it's 6, I think. Maybe it ought to only be 5. Most programs are 4-year programs, so we give you an extra year. Maybe we should put a little more restrictions on these programs to sort of wean students away from depending excessively on them. I would move to also promote ISAs, income share agreements, alternatives to student loans. Now, that's not going to solve the problems for those who are currently in the midst of borrowing money and are in the middle of college, but it could have some long-term effects that would be positive on others.
Reporting in Washington, D.C. for PJTV, I'm Michelle Fields.